Hello everybody, so today I'm going to be showing y'all how to do exercise 5 in homework this week. So it's pretty easy and straightforward. It's actually very similar to what we've already been doing last couple of weeks. The difference is this form right here, it's a new form that we get to learn from, and it's actually really, really cool, so I'm kind of excited to show y'all. Now, I already did the homework in the actual homework online structure, which is why I have it in Excel, because I wanted to make sure I was doing it right before showing it to y'all. So, first I'm going to explain a little bit what this form is. So if you've done the reading, then you know that the biggest thing in accounting is this: the assets equals liabilities plus stockholders' equity. And this form basically shows that balance all the way down. And so this is going to be a company. It says a tabular analysis of the transactions made during August 2017 by Columba Company during its first month of operations is shown above. Each increase and decrease in stockholders' equity is explained. And so this is basically a really nice way to be able to see how the assets and the liabilities, stockholders' equity, all lines up at the end of the day. So this company just started, and so the first thing that they did, as we can see, is they decided to issue stock. So they issued $24,500 of stocks. So they received $24,500 in cash, and that's how much stock is now let out to the company. The next thing that they decided to do, number 2, was that they decided to purchase some equipment for their facility. They paid for it with $1,960 in cash, and the rest of it they said, we're going to pay for it later, and so they put $3,100 in accounts payable. The next thing they did is they needed some supplies. This they only paid for with cash, so that's $860. And so that shows that we have $860 worth of supplies. The next thing that they did was that they sold something. They sold something for $10,900. And this is actually over here is going to help you with understanding what you're seeing. So this is saying this is a service revenue. So they sold this for $10,900, but the person who bought it didn't actually pay everything. They did a similar thing. They said, you know, we're paying $4,800 in cash right now, and then we'll pay you $6,100 later. This could also be multiple people who purchased, and some of them paid with cash. Some of them said, we'll pay you later. So that's the accounts receivable for $6,100 plus $4,800 equals $10,900. Alrighty, and then they paid some of that accounts payable. They paid $1,700. So you subtract $1,700 from accounts payable and $1,700 from cash. And then they decided, you know what, let's pay some dividends. So they paid $2,200 to dividends. The next thing that they did was they had to pay rent. So rent is $890. So you subtract $890 from cash, $890 right here for rent expense. And then for accounts receivable, some of the people actually paid their debts to you. So you can subtract $450 from your accounts receivable, and you add $450 to your cash amount. Now you have employees, so you have to pay a salary. And so right here, it shows that you are paying salary expenses of $3,400 from your cash. And the last thing you have to do is you have to pay your utilities expense. But right here, you decided to pay it later, so you have an accounts payable for $320, and that shows that right here. And then what I did, this is not going to be shown in your homework, but I actually just added everything up. 3,100 minus 1,700 plus 320 equals 1,720, and then with the rest of them as well. And then I just showed that all of these are going to equal 30,310. And then all of these added together is going to equal 30,310. And so as you can see, it's equal on either side. And so it's really nice to just show the breakdown of how everything has to be equal as it goes down. Your assets are always going to equal your liabilities plus stockholders' equity. All right, so going over to the actual work, the first thing that you're going to want to do is the income statement. And so this is, like I said, it's the exact same thing that you did before. It's just that you're getting all of your information from this chart instead of just the list that we had. So of course for an income statement, this is for the end of August 2017. And like I said, it's the first month. So we're not going to do for year ending in August 2017 or anything like that. We're just going to do for the month ended August 31st, 2017. And then the next thing we're going to do is we're going to do the revenues. Well, how much revenues did we have? As we see over here, service revenues is $10,900. The next item on our income statement is going to be expenses. Now, if we look over here, write that really fast. If we look over here, we have a few different expenses. We have our rent, we have our salary, and we have our utilities. I'm going to put the salaries expense first. And that, as you can see, is $3,400. And then I'm going to do the rest of the expenses. I'm going to do the rent expense. Which is 890, and then I'm going to do the utilities expense, which is going to be 320, and then total expense is going to be, add all these together right here, and that is going to total out to be $4,610. And then you can also see when I added over here, it's the same thing over here, 4,610. All right, so then the last thing we put is net income, which is putting these together. So you're going to subtract 4,610 from 10,900, and then that equals $6,290. The next thing you're going to do is you're going to go to retained earnings statement, and then that is going to, again, be for the month ended August 31st, 2017. And the first thing you're going to do is you're going to put retained earnings from August 1st. Now, if you remember, this is a brand new company. It's its first month of operation. So its retained earnings is going to be 0 because it didn't have any earnings from before. It's a new company. Next thing you're going to do is you're going to add the net income over here, which we can see right here is 6,290. And that, of course, also totals 6,290 because you're adding 0. Next thing you're going to do is you're going to subtract the dividends. And And the cool thing about over here as well is you can actually see that. It lays it out for you, that your retained earnings, it shows everything, that you're having your revenues minus expense minus dividends. So that's kind of a cool little thing as well that it shows you. Now your dividends were, as you can see, $2,200. So you're going to put that right there. And then your retained earnings for August 31st is then going to be $4,090, because as you remember, start out with $6,290, you're going to subtract $2,200, and it turns into $4,090. Now I'm going to get to the balance sheet, which so far has been my favorite sheet to fill out. I actually really enjoy it, so let's get to it. Now, if you recall, balance sheet is just for a single day, so we're not going to have for the month ending, we're not going to have for the year ending, it's just going to be for August 31st, 2017. And the first thing you're going to want to do is you're going to want to put your current assets, that is not how you spell current, there are two R's in current. Alrighty. Now, your first current asset is going to be the order of liquidity. So obviously, the thing that you can most quickly turn into cash is, of course, cash. And if you look, because I already added everything up right here, we can just very easily see that the amount of cash is, at the end of the month, is $18,740. Next is going to be our accounts receivable. That is going to be $5,650, and again, you can see right there. Next is going to be our supplies, and that will be $860. Again, right here you can see that. All right, and then our total current assets. I made this big enough. Hey, it is. That's awesome. Our total current assets are going to be $25,250. That's adding all those three together. All right, next we're going to do our equipment. Now, our equipment is not a current asset because our equipment is being used in order to make things for a long time, and so that's why it's not counted as a current asset. And then our equipment amount is going to be $5,060. You can see that again on the board. And then total assets is going to add up to be $30,310, which is exactly what I added up right here. All right, so for our liabilities, first thing we want to put is current liabilities. And then we actually only have one current liability right now, and that is the accounts payable. So we look over here, we can do the math on that. 3,100, what's that, what's that? So that's going to be 1720. Not 17,520, it's just 1720. All right, and then the next thing we're going to do is we're going to look at the stockholders. Now, if you recall, stockholders' equity is two things. It's going to be our common stock as well as our retained earnings. Now, common stock, we look over here. is again the $24,500. Let's put that. And then our retained earnings is going to be $4,090. Now this one, you can just go right over here and see in the previous sheet, $4,090. Then for last, we're going to put total, good grief. We're going to put total stockholders' equity. And that is going to total out. We're going to add the common stock and the retained earnings, and that will end up being $28,590. Then the very last, we just add up the total liabilities. And the stockholders' equity. And that's going to end up being the $30,310. And we know that we did it right because these equal each other. And so that is about it. So I actually am really enjoying this new sheet, how it kind of breaks down where the money goes and how it all evens out. And I hope that you do too. All right, thank you.